Hello and welcome to Startup Street. I'm Shruti Mishra and with me are Arundhati Ramanan and Ritu Singh. These are the top headlines from the startup space. Former CEO of Twitter Parag Agrawal along with two others sue Elon Musk. The executives who were fired by Musk after his Twitter acquisitions are seeking to be reimbursed for cost of litigation, investigations and congressional inquiries.
Truecaller to invest around $2.86 million in Mayhem Studios, the gaming studio owned by esports and Mobile Premier League. As part of the transaction, Truecaller will acquire over 4% of the shares in the company.
Venture capital fund Lightspeed invests $6 million in seed funding in workspace interiors platform Office Now. The startup aims to leverage the capital to expand to top 25 markets.
SEBI clamps down on instances where investors may be charged twice to invest in alternative investment funds, says investments that come through an intermediary with charges for the service should be onboarded only through a direct plan, also imposes strict rules capping fees and charges that an AIF can levy.
A geopolitical twist to the AI arms race. China releases draft rules for generative artificial intelligence products as domestic tech giants like Alibaba and Baidu start rolling out their ChatGPT-style products.
Those were the headlines that we're tracking for you this evening. But on What's Brewing today, co-founder and CEO of SaaS firm Zoho Corp, Sridhar Vembu says the government must draft a policy to regulate artificial intelligence in the country. The Zoho boss warned against the possible monopolization of AI, adding that software firms should be worried about an increase in AI-driven productivity without revenue growth. In a chat with CNBC-TV18's Jude Sanith, Vembu also said that if it came to choosing between people and profits, he would pick the first option. Here's a slice of that conversation.
What do you think would be some of the key challenges that you would have to contend with at this time and place? Even as we speak, we're in the midst of a global meltdown when it comes to information technology itself. Tech isn't doing well. And I'm almost curious how when the talk is about laying off and cutting down redundancies, which is what every founder speaks of these days, not everyone's calling it a layoff, in fact.
What I have ensured is that we have said that we will not resort to layoffs. We want to take that out of the worry list for our employees. There's so many things to worry about. At least we're not going to do a layoff. In other words, if they got used to funding their losses with VC money, then VCs get to call the shots. They'll say, we will no longer fund your losses, cut down your burn rate, or become profitable. Then you have no option because your revenue is not growing that much. How do you become profitable? You have to cut your cost. The biggest cost is people.
Right.
But we were running a profitable operation. So for us, the question is, do we want to take a reduction in profit? I would gladly reduce my profit rate. I will even go to, if necessary, we'll go to some loss in a downturn. See, a loss is supposed to be in a deep depth of the downturn. Some company could lose money for a couple of quarters if they had good cash reserves. The loss is not supposed to be during the bubble. Companies were losing hundreds of millions on a regular course. That's not normal. That's what really happened.
Absolutely.
So ours is a profit-making company.
Yes.
We are willing to suffer through some profit reduction, maybe even a mild loss at some point, if that's what the world awaits. But we don't have to. We can always deploy our people to new products we have to do, new projects.
I remember when I met you in November and we spoke of how much growth would slow. You told me that there were a lot of variables involved and that, forecasting growth at this point for Zoho would not be possible. Are you in a place where there's a lot more clarity in terms of how revenue growth will slow? You hit the 1 billion mark in revenue last year. What's it like for FY24? We've just entered the new fiscal. What's it like?
It's probably one of the most uncertain environments right now. We do live in this massive earthquake zone called the global economy.
Right.
So however strong a house you've built, you still have to suffer some shakes or some rattles or maybe some fallen cupboard or something in the house, even if the house itself is sound. So I believe that's how I describe the whole situation from the economic point of view. If that were the only thing, we know we have handled it through downturns, big downturns we have gone through. But there's another dimension now, that whole AI-related disruptions, where I expect software productivity to go up tenfold.
Yes.
Maybe 100-fold.
Yes.
It's like one software engineer could do the work of 100 eventually. Not immediately, but could be over the next 3 to 5 years. And the analogy I give is how handloom weavers suddenly confront the power loom, the air jets, all of that. And it's a whole different ballgame.
Yeah, and it's interesting you said that, and I read your tweet as well. It is almost trending towards 10x. but 100x efficiency could not be very far away. That could well mean more products, quicker productization,
Exactly.
which could also affect human resources at some point.
And here's how I say it. So when you have 10x productivity in a sector, if revenues grow 10x with it, then employment can be even.
Yeah.
Because you produce 10x more per worker, but you also sell 10x more, so the prices are same and you can pay the workers all of that. And you can pay the workers 10x actually with that. But if revenues start not growing at the same rate, if revenue grew only 3x, but productivity is 10x, then you have a problem. I do believe in AI as a digital public good. It can benefit all our citizens. But for that, we have to have input from our policies, all of that, to ensure that it benefits all our citizens. It cannot be a rent-seeking monopoly.
Right.
Like in a way that, for example, operating system used to be, where one company controlled all the operating system and collects rent. We cannot allow that with AI. That's important for policymakers to realize.
Well, that was Zoho boss Sridhar Vembu warning against the possible monopolization of AI. Moving on, global customer loyalty and customer engagement SaaS platform Capillary Technologies has acquired Texas-headquartered Brierley+Partners, a globally recognized leader in loyalty technology, strategy and execution. Now, this is Capillary's fifth acquisition globally and second in the United States, which signifies its growing footprint in the North American market. To talk to us about the future roadmap at Capillary Technologies, joining me now is its CEO, Sameer Garde. Sameer, welcome to Startup Street. Take us through the fine print of this acquisition. Is this a 100% acquisition? And if you could give us an idea about the cost of acquisition, and will Brierley+Partners run as an independent entity, and what happens to their team then?
Yeah. Hey, thanks for having me, Shruti. Wonderful to be on the show. I think this is just one more step for Capillary, and probably a giant leap for our journey to become the best loyalty company in the world. And yes, we have acquired Brierley fully. The numbers are not public, but Brierley is an incredibly well-recognized name in the North American market, with a legacy of 30 plus years. And Brierley is and will get fully integrated into Capillary.
Okay. So Sameer, what synergies again did you see with Brierley+Partners? What value add does it bring to Capillary Technologies' existing capabilities? And how do you plan to leverage Brierley's, like you said, 30 plus years of expertise?
Yeah. Interestingly, like you have Unilever in India for the FMCG market, Brierley is the same in the US loyalty market, right? It's kind of a treasure trove of talent within, and also the talent that they've exported outside of Brierley is something which is very loyal to Brierley. So you'll find people who are loyalty managers, you'll find people who are consultants, who are very close to have been close to Brierley in the past. It's a brand which has a very high awareness level, very high recall, and huge credibility in the industry. And we are going to retain the brand and say it's powered by Capillary or a part of the Capillary group. It has a plethora of capabilities, and sub-brands. Something called BLQ, which is the Brierley Loyalty Quotient. I mean, I can talk about that for an hour. It's an amazing property that Brierley has developed.
Okay.
And it's a design and a strategic consulting capability, which is kind of unmatched and highly respected in the industry.
All right.
And of course, we're getting some marquee logos in US and Europe with this acquisition.
Sure. So, Capillary Technologies has grown 3.5 times in the US since the acquisition of Persuade, which was in 2021. And this current acquisition is a significant step. Like you mentioned, it's a step forward in your growth strategy in the North American market. So talk to me about the impact of the global economic headwinds. The large US companies have turned conservative, spenders. How are you geared up for this? And what will be the medium-term impact on SaaS?
Hey, so I think if there are any headwinds, Shruti, we are not seeing them right now.
Okay.
Firstly, we have never had more interest for our capabilities from our new customers, potential customers, and existing customers. And secondly, economic headwinds impact market leaders. which in a way are the ones we are trying to disrupt in this market. And if there are economic headwinds or recessions, then marketers should focus on their existing loyal customer base, who typically contribute to more than 60-70% of their sales, rather than trying to go for new customers, which is always more expensive.
Sure.
Right? As we speak right now, I think we have probably the best ever growth in the funnel in the last 2 years in the US. And Brierley will and is already helping us in getting more opportunities because of
Okay. Now, like I mentioned earlier, this is Capillary's 5th acquisition globally and 2nd in the US. Is inorganic growth the way forward, Sameer? More acquisitions planned for the year? And if yes, then what areas will you be looking at?
Yeah, so I think build versus buy decisions, Shruti, are not binary. Like, you don't say, my strategy is only organic or only inorganic. I think they depend on a few things, right? If you want to establish an impactful and probably a faster market entry, which is what we are trying to do in the US with 2 acquisitions. If you want to get into new verticals for which you may have to build more product capabilities, you could look at an inorganic way of doing it. Or you're looking to build adjacencies on your product portfolio. So we will continue to explore both organic and inorganic growth levers and make decisions of build versus buy based on what we feel is the right thing for the organization in the long term.
All right.
We have and we will continue to integrate like we did with Persuade, like you mentioned.
Yeah.
Over the last 18 months, a little less than 2 years, we've grown 3.5x. Organically, with Persuade acquisition in the US.
Sameer, one final question, and if you could answer that really quickly. Your plans for India, how do you plan to penetrate deeper?
So India, we will continue to grow. We've signed up some really marquee names in the most recent year. We can't disclose the names, but and I think there is enough headroom to grow in India. There are at least 500 large enterprises in India, and we have only 100 of them right now. So lots of headroom to grow.
All right, that's good to hear, and wish you the very best for that. Many thanks, Sameer, for joining us on Startup Street today.
Thank you for having me. Thank you.
On that note, it is time for us to head into a short break. But coming up next, Verlinvest-backed early-stage venture capital fund V3 Ventures has recently launched in India and is looking to invest up to 100 million euros across Europe, the US and India. A special chat with the co-founder on the other side. Stay tuned.
Verlinvest-backed early-stage venture capital fund V3 Ventures has just launched in India, and it is looking to invest up to 100 million euros across Europe, the US and India. Now, V3 Ventures is going to focus on investing in the consumer space across new age brands, technology, enablers and platform at seed and Series A stages. Joining me now to talk about V3 Ventures plans for India and other markets is Arjun Vaidya, who is a co-founder and investment partner at the fund. And of course, we do know him from Dr. Vaidya's as well. Arjun, welcome to Startup Street and thank you very much for your time here. Plenty of VC funds mushrooming in India, across the world. You've been an entrepreneur, you are one with Dr. Vaidya's and an investor with Verlinvest. So tell us why V3 Ventures now and how is it any different from the others that exist?
Yeah, so look, I think, Ritu, first off, thank you so much for hosting me. It's so great to be back on this platform and to talk about what we're doing at V3 as well. I think the fact that there are so many VC funds mushrooming all over India talks about the depth of the opportunity. Specifically, if I am to talk about V3, I think here the idea with what we're trying to do is really build a fund and build an investment partner to entrepreneurs that is backed by people who have had a similar journey. And so both Lopo and I have been entrepreneurs, built and sold consumer businesses. We're backed by Verlinvest, which is one of the sort of most prominent consumer investors across the world, backed some of the most iconic brands globally for the last 25 years, in India for the last 10 years. And so what we're trying to do is really bring this experience of Verlinvest and of us as ex-entrepreneurs and people who have been through the same journey to new age entrepreneurs to really partner with them on the journey and build something long-term and meaningful.
Well, of course, you will bring in both your investor as an entrepreneur and an investor. But, Arjun, this 100 million euros that you have to be invested across 3 markets, how much will it be for each geography, or is it sort of agnostic to where you're investing it? And also, how do you hope to carve a niche for yourself in these markets, whether it is Europe, US, or the India? Again, plenty of people already there. And like you said, of course, it speaks about the opportunity.
Yeah, so I think, Ritu, I'll talk about India specifically. Roughly 30% of this will be invested in India over the next 24 months. We've already started off our investment journey at V3. We've made 2 investments that have been announced in a company called Cuckoo FM in the sort of content and vernacular podcast space, and a company called Eka Care in the health space. I think from our perspective, in terms of niche, we have been, as Verlinvest and then me as an entrepreneur as well, very involved in the consumer space as a digital consumer brand. And so we bring some amount of understanding and expertise in this space. And we want to really sort of build the next generation of brands. That's the idea. We obviously come with experience in the consumer brand space, but we think that there will be many brands built in the consumer space digitally as well. So whether it's consumer brands, enablers to commerce, digital consumer technology platforms, all of these things remain in core focus for us. And we're fundamentally bullish about the next decade in India. And hence, I think we're so excited about doing what we're doing.
You know, like you said, consumer is very much your forte, right? So V3, when you're saying early stage investments across these new age companies, technologies, platforms, and so on, within these, what are the themes that are most exciting to you as an investor today?
Yeah, look, I think, Ritu, for us in the consumer brand space, I believe India is a brand starved nation. And so we'll invest across the consumer brand landscape. I think a big interest area for me personally is the Bharat opportunity. I built a consumer brand, Dr. Vedas, where 82% of the sales were outside the top 10 cities. And I think with a burgeoning middle class, with a young population, and with huge amount of aspiration that's going to be built in our domestic consumption economy, I think that's a big theme we'll do. And obviously, I think a lot of consumption is getting digitized. So consumer technology platforms that take this, for example, Eka Care, where we invested, is another big theme of interest for us. So really, the new age of consumption through digital, offline, online is the big focus area for us, and we've already started off this journey.
Well, you mentioned a couple of investments that you've already made. What is the investment target for 2023 in India? And how do you plan to progressively scale this? And what kind of ticket sizes are you writing for each check?
Absolutely. So I think, Ritu, in terms of initial ticket size, the first investment we make will be usually in the $1 to $3 million or 8 to 24 crore range in the first ticket that we invest. Obviously, we will back and continue to follow on in companies where we see lots of potential, which we have backed and which continue to grow. And that's what we've done in the first 2 investments and what we continue to do. In terms of investment horizon for this allocation of capital, I think over the next 24 months, this year we remain very active and very excited and bullish about the opportunity. We are in fact actively evaluating and have a couple of investments which will happen very soon, and we're very excited about those as well. So I think this year we remain as excited and as bullish to continue to invest.
Thank you very much, Arjun, for your time here on Startup Street. Pleasure speaking with you, and all the very best with your new venture, V3 Ventures.
Thank you so much, Ritu. It's been a pleasure, and hope to see you soon.
On World Pet Day, we decided to put the spotlight on Supertails, a one-stop destination for all your pet care needs. The startup, which offers a wide range of products and services for pets, including veterinary consultations and online shopping, Supertails.com aims to build a holistic pet care platform for India's growing pet care industry. Today, we're joined by the company's co-founder, Vineet Khanna, to discuss the company's growth journey and the potential of India's pet industry. Vineet, thank you so much for joining us on Startup Street. Like I said, you're a full-stack, tech-enabled pet care startup. Talk to us about what you have on offer. How are you making the pet parenting journey an easier one?
Thanks for having me on the show. Really nice to be here. So what we are doing at Supertails.com is that India is a very interesting pet care category, wherein more than 85% of the Indian pet parents are first-time pet parents. So unlike their European or US counterparts, their problems are going to be very, very different. So what we do as an integrated platform is for this Indian first-time pet parents solve their nutrition, online healthcare, as well as behavior training needs, because this category is low on education and awareness. So only selling products does not, give you a right to win in this category. And hence, we offer something which is more integrated and which solves their real problems.
Right, so it's more of a holistic services that you have for them. Now, you recently strengthened your offerings with Henlo. Talk to us about your product and the demand you've seen for it so far.
So Henlo is very, very recently launched as pet parents ourselves, the three founders, and the insights that we got in our first year of operations. We understood that nutrition in pets in India is not completely solved for. There are only 3 or 4 large brands, which constitute more than 3/4 of this market share. What also is that India lacks a complete, clean, human grade, kind of a nutrition product. As a result, pets in India, it's a well-known fact, live a little lesser than, their, Western counterparts again. So what we set out on a mission was to make a product, make a nutrition product which increases the longevity for pets. And that was the thesis of launching Henlo, so that everybody loves being around pets. So can we just increase the amount of time that they spend with their pets a little longer? And in that, Henlo has launched its baked dry food right now, and there would be obviously many more product offerings to come in the future.
All right. And what are those product offerings that you have? Is there anything in the pipeline right now?
Yes, I think as we said, we started with the basic needs of nutrition, healthcare, and education, which is behavior training. Now, this will form the basis on which multiple Lego blocks will be built in future, as and when the category in India evolves, as and when we get more insights into what the customer, what the Indian pet parent wants in their pet parenting journey. We will seamlessly integrate them into our offering. As well as so things like online pet pharmacy, things like veterinary diets, things like insurance, if and when the market gets ready for it, will become logical extensions to our offering.
All right, let's talk about numbers then. What are your revenues that you've clocked so far, and what are the targets that you've set for yourself for this year? And where are you seeing most of the revenues coming from? Which of your services is giving you the most amount of revenue?
So in the last, 1 year, we've grown more than 5 times, and we still believe we have just scratched the surface. And, the ambition for this year is to grow, almost 400 to 500%. While we don't speak, numbers so openly, but what we had done last time was a 50 crore ARR, a couple of quarters away. And the aim is to grow, almost more than 4 to 5 times over that.
All right. And what are the kind of insights that you're picking up from your clients? How has this space evolved, and where do you expect it to go?
The space is going to evolve interestingly, because the Gen Z and millennials are adopting more pets. More than 92% of the adoptions are amongst these two categories in the recent past. Interestingly, this is also not just a tier 1 phenomena. This category started in tier 2 and tier 3 first, unlike many other categories, and then came to the urban India. So that's one very interesting aspect. As people, the houses and the apartments become smaller, the cat population is also going to increase. And with Gen Z adopting, a relatively lesser maintenance, pet to be kept at home. So all these are going to be very different growth levers. However, the most important growth lever is going to be the calorific conversion, which means what percentage of people end up giving packaged food to their pets. That stands at sub 10% for India, whereas it is at 70% for US, almost 90% for Europe. That will emerge, because when Gen Z and millennials are adopting dogs and cats, they want to give the best to their fur babies. And for that, they would be, searching, figuring out from the internet, and always on the lookout for new nutrition brands, which is where the penetration of pet food in India is going to grow.
Right. And how big is this pet care industry in India? How big? What's the opportunity here? If you could quickly tell us.
At this point in time, India is close to $1 billion, in revenue. But what's interesting is that the consumption actually, which is more unorganized and people end up giving home cooked food, is almost 20 times of that. Even for the organized element, we believe that this is expected to go close to $5 billion by 2030 on the backing of the reasons that I mentioned: more pet population, right, more people giving, packaged food, and more premiumization of the category.
All right, Vineet. We're completely out of time, but thank you so much for joining us on the show today, and we wish you all the best going forward.
Thanks for having me over.
With that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.